Hello everyone, this is Tina, guest market analyst from FPG. Today is 17th June, Tuesday. Risk-on sentiment resumed in the global markets due to de-escalating military conflict between Israel and Iran. Iran signaled its willingness to restart nuclear talks, triggering a sharp retreat in the crude oil prices. At the same time, gold also pulled back from its recent high, potentially forming an engulfing pattern. In the following video, I'm going to talk about the potential market trend of crude oil and gold. Let's get it started. From the two charts, we can tell crude oil and gold have a negative correlation in history. Crude oil has been in the downtrend while gold has been in the uptrend. However, lately it shows signs of reversing. The crude oil WTI signal bottoming up, at the same time gold seems to be topping out. Firstly, let's have a look crude oil WTI, the daily charts. Crude oil has had a major breakout of the resistance level around 23.6% Fibonacci retracement. The price is about $65 per barrel. So last week, the escalating geopolitical tension had sent oil price to spike, and at the time it reached above $77 per barrel. Some investment bank expect oil price to top $90 per barrel. Yesterday, profit taking has sent it sharply down and now is testing the near-term support around the $71 per barrel, which is 38.2% Fibonacci retracement. If this level holds, I would say crude oil could continue going up. However, I think at the moment it has been overbought. It also depending on the development in the military conflict in the Middle East. So if further de-escalation in Iran and Israel's military conflict would send it lower and test the moving average around $66 per barrel. However, in the long term, I would still expect crude oil would continue its reversing trend, as MACD has already broken out this midline and signal a new start of its uptrend. So let's keep close attention around the near-term support level, which is $71 per barrel. This level is also the trend line support. And the next one is gold cash price here. The last 2 days has formed a typical bearish engulfing pattern. This pattern usually signaled a further down in the price. Also, so this short-term uptrend has formed a bearish divergence with stochastic. The current high in stochastic is lower than the previous high. At the same time, the price is moving in the uptrend. So this pattern also signaled a further retreating in gold prices. So the near-term support level would be still around the 50-day moving average. Once it's break down below here, I would say the next support level will be the low on the 15th May. We can also use a Fibonacci retracement here. I'll connect the low in November 2024 and the recent high, which also potentially forming a triple top here. The Fibonacci also indicating support level around the low in May. Once it's break down below here, the next support could be falling on the 50% Fibonacci retracement. It is the low in April, which is around $2,968 per barrel. So this is today's technical analysis. Thanks for watching. See you next time.